If you'd like to learn how to create a forex trading plan which would help you to get trading results that look like this, then watch closely, because by the end of this video, not only are you going to have your very own foolproof interactive forex trading plan, but I'm also going to let you in on a little known secret which will help you to stick to it relentlessly through good and bad times like a pro forex trader. So let's get started. One of the first things you'll need to do when you go about creating a forex trading plan is to set a goal. And since we are trading the forex markets to make money, my guess is you're probably thinking to yourself that your goal should be something along the lines of making a 10% return on investment on your trading capital each and every month, right? Well, guess what? Growth-based goals like wanting to make a profit of about 10% of your trading account's capital each and every month is actually the worst type of goal a trader like yourself who's aspiring for consistent profitability could set for themselves. And that's simply because growth-based goals like this will only make you focus on the outcome of the trades you take instead of focusing on the process of taking each and every trade that a proven trading strategy, which gives you an edge over the market, signals to you. Trust me, if you'd like to become a consistently profitable forex trader, you'll need to stop setting goals which focus on the outcome of the trades you take and start setting goals which focus on the process of flawlessly executing each and every trading signal generated by your forex trading strategy. And this is simply because setting goals which focus on the outcome of your trades is a futile exercise since you cannot control those outcomes. On the other hand, setting goals which focus on the process of trading, that is, the flawless execution of each and every trade signaled by a proven forex trading strategy which gives you an edge over the markets, is completely within your control. For example, if your goal was to take 30 trades using a mechanical forex trading strategy that's proven to be profitable when it was rigorously backtested on historical data and forward tested on a live account with real market conditions, then that goal is within your control because all you'd need to do to achieve it is to take each and every trade which that trading strategy tells you to without hesitating or deviating from any of its rules, whether you like it or not. But if your goal was to make a 10% return on investment each and every month, then you're probably going to have a hard time achieving it, especially when market conditions temporarily stop favoring your trading strategy, causing it to encounter a drawdown. The truth of the matter is, small retail forex traders like you and I just don't have the resources to force the market to move in favor of our trading positions to make us experience winning trades whenever we feel like it. And that's why you shouldn't dump a trading strategy that's proven to be consistently profitable over years and years of historical data when it was backtested and forward tested in live market conditions just because of a losing month or two. That's just not how the consistently profitable traders who make a living off of trading the markets think or act. Forget about losing months. In fact, some of the pro traders out there have a string of losing years, but that doesn't stop them from pulling mind-boggling profits out of the financial markets over and over again. So long story short, don't set a growth-based goal like, I want to make a 10% profit on my forex trading account each and every month, because you can't control the outcome of your trades, and goals like that will only set you up for failure and cause you to feel stressed out when those inevitable losing streaks cause your trading strategy to encounter a losing month or two. On the other hand, when you set performance-based trading goals like, I'm going to take 30 trades using FXMindTrix Academy's advanced trend trading strategy over the next 6 months or less, for example, you're going to find it a lot easier to reach that goal, and you're not going to be bothered by the swings or fluctuations in the monthly P&L of your forex trading account simply because you know that the edge of your trading strategy is eventually going to play out over time as long as you take a large number of trades with it. But bear in mind that just setting a goal of taking X number of trades in and of itself is not enough, because it wouldn't make sense to set a goal of taking 30 trades with a trading strategy that has a high tendency of encountering 30 losing trades in a row. So to really stack the odds of winning in your favor, you'll need to take a step back and analyze the performance of your chosen trading strategy by looking at the results from its backtest on historical data or forward test on a small live trading account. For example, if your goal was to take 30 trades using a single trading strategy over the next 6 months, you'll want to see that the odds of losing those 30 trades in a row is slim to none when you analyze the data from the strategy's backtest results after you must have used it to take a lot of trades in the past. When you take the time to take care of your losses like this using sound risk and money management, your profits are eventually going to take care of themselves. In a nutshell, you should only set performance-based trading goals because they're going to help you to focus on the process of trading by sticking to the rules of any trading strategy that's been proven to have an edge over the markets when it was rigorously backtested on historical data and forward tested on a live account with real market conditions. And you should avoid judging the performance of any trading strategy based on the outcome of a single trade or the ROI of a single month, because that's like trying to look at a picture or a digital image by focusing on only one of its pixels. If a single winning or losing trade from a trading strategy was a pixel, then focusing on it is only going to make you miss out on the big picture which that trading strategy is trying to show you, which can only be seen after taking a lot of trades with it. And just so you know, the video you're watching now is part of the videos in our free Profitable Forex Trading Blueprint series, which is a crash course designed to help you go from being a losing trader to a consistently profitable Forex trader in a step-by-step manner. In the previous video in this series, I revealed the top 5 deadly trading mistakes which prevents struggling traders from becoming consistently profitable Forex traders. And one of those mistakes was trading without a carefully crafted, written Forex trading plan, which would help you to avoid making the mistakes which are made by the losing majority of traders in the Forex trading industry. And that's why I put together the video you're watching now to help you create a foolproof Forex trading plan like the pro Forex traders, in line with the second step of our simple 4-step profitable Forex trading secret formula. So if you just stumbled across this video and you'd like to get instant access to the other videos in the crash course, as well as the interactive 3-page Forex trading plan, which I'm using as a template to show you exactly how to create your very own Forex trading plan in this video, just click on the link in the description below or head on over to www.FXMindTrix Academy.com/blueprint. Now with that out of the way, let's move on with the creation of our foolproof, profitable Forex trading plan. Remember when I told you moments ago that you cannot control the outcome of the trades you take? Well, it turns out that actually doesn't matter as long as you take the time to craft a robust risk management plan. And that's why in this step of our foolproof Forex trading plan creation process, you're going to learn how to prepare for the worst whilst also hoping for the best. The first thing you'll need to do to create a robust risk management plan is to clearly state how much money you're willing to lose before you'll stop trading and take a step back to thoroughly reassess your trading performance. Doing this will protect you from blowing your trading account or losing more than you can afford to lose, even if market conditions were to completely go against your trading strategy and cause you to lose every single trade you took. So for example, if you had a $100,000 trading account and the most you were willing to lose on that account was $10,000, this would mean that the maximum drawdown you're willing to incur on that trading account is exactly 10% of its starting balance. In that case, if you were risking 1% of your 100k trading account starting balance per trade and all of the 30 trades you set a goal to take were to hit your stop losses, you're going to end up losing about 30% of that trading account starting balance. So if you'd like to keep your risk within your max drawdown limit, you'll definitely need to reduce your risk per trade to a number which will ensure that you don't lose more than you can afford to lose, even if all of the trades you set a goal to take turned out to be losing trades. As a result of this, you're going to need to divide your max drawdown with the number of trades you set a goal to take in order to get your maximum risk per trade. So if you had a maximum drawdown of $10,000 and your goal was to take 30 trades, you'll need to divide that $10,000 by the 30 trades you're planning to take in order to get the exact amount you'll need to risk per trade to avoid blowing your Forex trading account or losing more than you're prepared to lose. Doing this exercise is going to give you clarity and also help you to plan with the end in mind so that you won't end up losing more than you're prepared to lose, even if market conditions were to completely go against your trading strategy. But just because you set a goal of taking X number of trades and you've also used our risk to reward calculator to work out how much you could make judging by the performance of your trading strategy in the past, in reality, reaching your goal is not going to be that easy. You're likely going to face all sorts of challenges even if you're following the rules of your trading strategy to the T. There are times when things that are completely out of your control could affect your trading. Things like unintentionally missing trades when you're away from your trading platform for legitimate reasons like sleeping, for example. And you could also have your trades getting triggered by your broker even when price hasn't reached your trade entry level because of slippage or all sorts of things like that. In the same vein, your stop losses could also get triggered by your broker even if price hasn't really reached your SL price level. So even though you're going to do the right thing by setting a foolproof forex trading plan just the way I showed you to, you should also bear in mind that achieving your goal or reaching that goal that you set for yourself could actually be a bumpy ride. So you should strap your belts and get ready for that, okay? So assuming you've used our risk reward calculator and the result from the backtest of your forex trading strategy to determine the exact number of trades you'll need to win in order to hit a certain profit target, you still need to bear in mind that the distribution between your winning and losing trades are going to be random. Even though it's possible, it's highly unlikely that you're going to get a winning trade followed by a losing trade, followed by another winning trade, and then a losing trade over and over and over again in that order. Regardless of the trading strategy you choose to use, the outcome of the trades you're going to take are not only going to be random, but they're also probably going to occur in clusters at some point in time. For example, if your goal was to take 30 trades with a trading strategy that's got an average win rate of 43% and a hard-coded fixed risk to reward ratio of 1:2, with the hopes of passing a prop firm challenge which requires you to earn an 8% return on investment, in order to pass, you're going to need to win at least 13 out of the 30 trades you're going to take, as you can see from our risk to reward calculator. In other words, even if the first 17 out of the 30 trades you set a goal to take using your chosen forex trading strategy all turned out to be losing trades, that still wouldn't prevent you from earning the 8% ROI you had in mind if the remaining 13 trades all turned out to be winning trades. So why is this important, you ask? Well, understanding this sneaky little mindset hack is important because it's going to help you to remain calm and also take off a lot of the stress you're likely going to face when your chosen forex trading strategy begins to go through a drawdown. Unlike the average forex trader who is probably going to lose their cool and start breaking the rules of their trading plan after encountering something like 5 or maybe even 10 losing trades in a row. And this is simply because the average retail forex trader places a lot of emphasis on the outcome of each trade they take instead of analyzing the overall performance of their trading strategies after taking at least 30 to 100 trades with them. When you know that you could still end up hitting the profit target you had in mind, even if you were to encounter 10 losing trades in a row, you're not going to feel reluctant to place trades whenever your trading strategy tells you to do so. In the forex trading industry, it is not uncommon to see inexperienced traders risk all of their trading capital or maybe even a huge chunk of it on a single trade. But you're almost never going to see professional forex traders doing that simply because they understand that trading is a probabilities game and also because they know that a single trade should never decide the future of their trading careers. If a single trade is going to make you rich if you win it, or ruin your trading career if you lose it, then there's something terribly wrong with your trading. You need to understand that no matter how good a trade setup looks and how many boxes it checks on your low risk, high probability trade setup confluence checklist, it could still turn out to be a losing trade. No matter how good a trade setup looks, there's absolutely no guarantee that it will turn out to be a winning trade. And that's one of the reasons why you always need to practice sound risk and money management, since that's the only thing that's going to protect both your mental and trading capital at all times. But it's also worth mentioning that just because a trading strategy had a 43% win rate when you took 100 trades with it during a backtest on historical data, that doesn't mean that it's going to have that same 43% win rate when you take 100 trades with it in the live markets. On the contrary, it could end up having a win rate which could be higher or lower than the win rate you had during your backtest, and that's simply because market conditions are always evolving. Therefore, you should factor in the possibility of having a win rate which could be higher or lower than the win rate you had during your backtest, and also plan for it accordingly. For example, if your trading strategy had a 43% win rate when you took 100 trades with it on historical data during a backtest, it wouldn't hurt to play out the scenario of what could likely happen if it ends up having a 30 or 60% win rate for the next 100 trades you're going to take with it on a live trading account with real market conditions using our risk to reward calculator. So if your goal was to take 100 trades with a trading strategy that has a 1:2 risk to reward ratio and an average win rate of 43% when you took 100 trades with it during a backtest on historical data, you should also prepare for a worst case scenario which could happen if that trading strategy were to have a lower win rate than the 43% it had when you took 100 trades with it during your backtest on historical data. It also wouldn't hurt to hope and plan for a best case scenario where that same trading strategy could end up having a win rate which would be higher than the 43% win rate it had when you took 100 trades with it during your backtest on historical data. Knowing this will tremendously help you to focus on the big picture as opposed to focusing on the outcome of each trade you take, since even if you were to only win 35% of the trades you take, you're still going to be profitable when you hit the 100 trades goal you set for yourself in this example. So to help you better understand what we've been talking about so far, this is actually the backtest result of one of my trading strategies. And as you can see from this backtest, I actually used it to take somewhere around 296 trades. At its best, it only had 14 consecutive winning trades, and at its worst, it only had 14 consecutive losing trades. With this type of stats from the backtest, if you were to decide that your goal was to take 30 trades with this trading strategy, then you can see from the backtest that that's not a bad idea, because at its worst, it never had consecutive losing trades, which were even half of what you want to set a goal to take. And even if the markets were to go completely against your trading strategy, then you're not going to be losing more than your max drawdown limit, which is an amount that you're comfortable losing in the first place, okay? Even though I was risking 1% of my account's starting balance on each and every trade I took, I actually never ever came close to my max drawdown limit, which is 10% of this account's starting balance. I only had a max drawdown of 5.85%. And for those of you who are wondering how I would be risking 1% of my trading account's capital on each trade I took and have 14 consecutive losing trades but not have a max drawdown of 14%, the reason is simply because for this particular trading strategy, I actually scale out of losing positions, okay? It's part of the strategy's rules. So for example, when we look at some of the losing trades I took with this trading strategy, you can see that some losses are less than my max loss per trade. So like I told you earlier, for this particular trading account, I'm actually only risking 1% of my trading account's capital on each and every trade I take. But you can see that there are times when I would have losses that would only be around $250, $60, then some might be $700 and some might be $800. And that's the reason why you can see that the strategy had 14 consecutive losses, but it never exceeded my max drawdown limit. But all that being said, past performance does not guarantee future results. What I want you to do is to go and backtest your trading strategy, and once you've done that, you should use that data to make informed decisions which will revolve around the creation of your trading plan. So if you want to set a goal of how many trades you want to take, you should look at your backtest results and see that if I'm setting a goal of taking 30 trades, for example, then I want to see that my trading strategy didn't have maybe 40 losing trades in a row. Because if that was the case, then this is something that could happen in the future. And I'm not saying that because my trading strategy, this particular one that I've backtested, the worst consecutive losses that it had in a row in the past was 14 trades or whatever. I'm not saying that it can't have 30 losing trades in a row. What I'm saying is, even if it does eventually have 30 losing trades in a row, that 30 losing trades that I'm going to lose, I'm actually comfortable losing that money, because before I came up with my max drawdown limit, it's actually a number that I was comfortable losing before I set that particular drawdown limit. So even if the worst of the worst was to happen, I would still be comfortable losing what I set to be my max drawdown limit. And that max drawdown limit is what I'm going to use along with my goal to actually get how much I'm going to be risking per trade. I just don't want you to coin up those numbers from your head without using your strategy's backtest data to make informed decisions, okay? That's what I mean. That's just what I'm trying to show you here. If you've been trading for any considerable length of time, I'm pretty sure you know that having a forex trading plan and being able to use that trading plan to completely transform your trading performance for the better are two entirely different things. And that's why you absolutely need to watch this video so that you can learn how to track and review your forex trading performance like a consistently profitable forex trader.